G'day traders, 1 minute mindset reset. Probably going to be longer than a minute today. So today, free cash Wednesdays, parabolic setups, several instruments had explosive moves. We talked about different scenarios occurring today in terms of day 3, Monday, Tuesday, Wednesday, and gold delivered low-hanging fruit. Low-hanging fruit in the first hour, low-hanging fruit at the New York Open. And for traders who are looking for the reversal right at the beginning of the third hour, a reversal trade back up into New York Open shorts on day 3. That was gold. Now, gold is very predictable in the sense that it is timed and measured. I think, to be honest, it's a fake market in that it's completely manipulated, which makes it predictable. So 3 levels of rise, first hour trade, bang, straight down 50 pips. No break in structure, no indication whatsoever of any reversal, no major red news on the calendar. When I talked about this last week, when there's no major red news on the calendar, that means 2 things. Number 1, New York Open can be an important time. Number 2, there's no reason for traders to not take a trade that aligns with the best trade setup. Now that brings me to my next point. Essentially, there's only 2 things you can do. You can either buy or sell. There's 2 types of trades. You've got, or do nothing. There's 2 types of trades when it breaks down to the simplest concepts. We have trend trades and reversal trades. That's it. So we have pump and dumps, dump and pumps. And whether that's a trend trade or a reversal trade, those 2 concepts are universal and absolute. Now, the next important thing to ask yourself is that if you're counter trending a market today, meaning that, for example, we had traders who messaged me and asked me about why counter shorting the yen crosses didn't work. My question comes back again. What best trade setup was there? My objective is never, ever, ever, and I repeat, it is not just to sell something that's up high or buy something down low. A trader asked, why would you short gold back down to the low? It broke the low and pulled back inside. That's a lower low. Why can't a market go lower? Why can't a market go higher? It's day 3. We had indexes. We had right at New York Open, 9:30, vertical moves. Now, here's where timing is so important. So we had vertical moves for 1 hour, that middle hour, straight down into lower level longs from the London session. Now, 1 hour, New York, middle hour, New York Open. Second hour, reversed inside on a couple of them and took out the low and pulled it back inside of the low of the day. Third hour begins a march back up. Day 3, down in the low of the week. Are we working the high or are we working the low? Now, for traders who stuck around, there was an explosive parabolic move, low of the week, high of the week. In the S&P, NASDAQ, I believe, they all went vertical, but obviously S&P traded back down. It was in the trading range, but day 3, down into the low of the week. DJ30, reversed in London, traded back into the breakout of Monday's low and went vertical down for 1 hour, sideways 1 hour, third hour explosive reversal. So we had explosive parabolic moves on the yen crosses. We had a parabolic move in London on the Canadian dollar. First green day yesterday for an explosive move into lower level shorts from Monday's dump day. We had longs in Swiss franc until third hour. Just coming back to some simple things. If you are frustrated or angry or upset or you're struggling, let me explain something to you. If you think you're unique in that there's so much to learn or there's all these things, I want you to ask yourself a question. What made you take the trade that you took today, where another trader took the same instrument and maybe profited off it? So we had a best trade set up on several instruments. Some traders, and I made this post, they're obsessed with counter trending, regardless of this, of having a setup or no setup, just because it's up high or just because it's down low. Now, there are several traders who traded oil long. They traded oil short after the breakout, and then it went long again outside of the 3-hour window. But for traders who were trading in the northern hemisphere, who wanted to stick around for 1 hour, 2 hour, third hour opportunity, there were explosive trades. Here's a question to ask yourself. Again, if you're frustrated, angry, there's all these little concepts, fine. But what made you choose the actions that you took today? What made you take the trades that you took today? And why did other traders take trades that gave them profits into their trading account? What was the difference in your thought process versus the other traders' thought process? Why did they see a directional bias in one direction that turned out profitable? And why did other traders trade the same instrument in the exact opposite direction, fighting the tape? Why were they fighting the tape or just getting in randomly? Understanding time rotation again. Right at 9:30, the markets on the indexes went straight down. I only trade the indexes in the U.S. session. I only trade oil in the U.S. session. Gold, again, no evidence of a reversal. Nothing. I mean, there was a first hour low-hanging fruit trade, and then I said that the middle hour either has to break structure and coil for a third hour reversal possibly, or we'll be looking for low-hanging fruit again if there's a setup. If there was a setup right at 9:30, bang, straight to the low, 75 pips. Remember, it's target practice. Somebody's going to get taken out. So first they're going to go after the easy fruit, the low-hanging fruit. So 3 levels of rise, bang, straight down. If you're trading a market that's trending, so again, several traders looked and saw a first green day on pound yen, except that it's a peak formation low first and then a peak formation high. That's higher highs, higher lows. That's also the day zero setup. Peak formation, consolidation in a market that is making higher highs and higher lows. It broke out before the U.S. session. It broke out before the U.S. session started. Higher highs, higher lows. Dump and pump, parabolic setup, day 3 session. Euro yen, same thing, but no peak formations. It was higher highs, higher lows. CAD yen, even the US yen didn't quite move as strongly as the other pairs. But my point is this: instrument selection is important, but your choice of instrument and your choice of direction in your trade, your timing of that trade, are all independent variables. They're all things that if you're frustrated and angry, just think, what if you did the other trade and made money? So it's that subtle difference in your thinking of whether or not you can get angry, frustrated, and all that. It won't change a thing. It won't do a thing for you. And listen, you're not going to get sympathy. You'll get empathy, but not sympathy, because don't think that you're different or unique in that you're struggling or frustrated or angry. And I've said this before. Nobody cared when I sat in the corner, bawling my eyes out after blowing out accounts over and over again. Okay, so there's not one trader that I've met, 7-figure traders, who have told me stories that would blow your mind. So if you're angry, frustrated, pissed off, good. What did you learn from it? So here's the thing. If you're going to be a trader, figure out how to make money on the days that it's easy to make money. Otherwise, quit. Just quit. Give it up. Or trade really small and make it a hobby. Do your thing. But if you're serious, what did you learn? You did it. You did. You clicked the mouse today. You clicked the mouse. And if you clicked it and it didn't work out, what made you click it in that direction where another trader clicked it in the other direction and came out and said, this is awesome. That was a great setup. Worked out perfect. Walked away, locked in the money, and got off the screen. Subtle little differences in your thought process, in your behavior, in your routine, and how you're looking at the markets can be the difference between being continuously frustrated, angry, resentful, pissed off, emotional, and all those things. And that means you're emotional. That means you're not learning. You're not you're not taking that in and going, what if I'd gone the other way? Why did I see it this way? Why did I get in at that time? Why didn't I get in at this time? Why didn't I wait? Why didn't I get in earlier? Whatever it is. I mean, day 3 parabolics. Free cash Wednesday. Maybe we're going to get free cash Friday. Parabolics again. Day 1, day 2, day 3. We have Fed on Friday at 11 a.m. Listen, I had to work on myself and I had to manage myself. I had to fight impulses. I have to continuously remind myself of, go back and look where money was made today. A lot of money was made today. What was the difference? And congratulations to the traders who made that money. And then for the same thing, for traders that made that money, look at the charts. Remember those setups. Trend trades, continuation trades, reversal trades, whatever they took. Indexes, there was a reversal trade first hour. Again, a reason to lock in the money, get off the screen for traders who were interested in trading longer, who want to trade. First hour, second hour, boom. Third hour explosion. Timing, levels, behavior of price, no major red news. So, only you can fix it. You can get mad, you can get angry, you can do all those things. You can get elated and overconfident and overtrade because you made a lot of money today. Or you can stick to the process and just keep rinse and repeating. Day 1, day 2, day 3. The simplest thing for people to, if you're, but I'm so confused about the day count, as we keep repeating, 3-day setups, day 3 breakouts, Monday to Wednesday, Wednesday to Friday, 3-day templates. If that's too confusing, then do this. Just trade Monday to Wednesday, Wednesday to Friday, day 1, day 2, day 3, day 1, day 2, day 3. Simple. That's really simple. There's a template every week. Dump and pump and dump. Could be a dump and pump from Wednesday to Friday. It could be a pump and dump from Monday to Wednesday. It could be a dump and pump from Tuesday, Wednesday, Thursday, high of week into Friday. I don't know. But there's going to be a 3-day template. And if you only took 1 or 2 trades in the whole week and they're parabolics, you could still, grow your account very quickly. So I don't say this with any frustration. I'm trying to get you, if you're frustrated and struggling, to click the switch, because some traders made an absolute killing today. I mean, I got some emails. Some traders are putting some big money into the markets. They made a killing. So instrument selection, patience, discipline, understanding of the setups. Listen, if there's so many things to remember. It's great after a 1,000 years of trading and here's a really simple thing. 3-session setup on day 3. Wednesday is day 3. Friday is day 3. Maybe you'll get a US Asia London trade. Maybe you'll get a Asia London US trade. Or maybe it'll be a London US Asia trade. 3 sessions on day 3. And if it's maybe a really big move, it'll be a Asia London New York trade on day 3 for a 3-session, 3-day setup for a parabolic move. And if you have no reason to be counter trending on a trade, then why don't you think about trading with the trend? If there's no major red news, no reason for that market to explode and be reversing on you or anything else, if you have a setup, timings, levels, behavior of price, keep it simple. And as one trader said, how can I keep it simple? Well, if you're struggling and you're frustrated and you're not getting the trades, stop trading. That's simple. Stop trading. And then step back until you know exactly what you are looking for. And then gradually step back and tippy-toe into the market. Because if you're nailing parabolic trades, you can grow your account quickly. Your psychological capital is intact. Your confidence is there. Your discipline will grow and develop. And your consistency is reproducible. And as long as you don't deviate from that, your account will grow. So, free cash Wednesday, parabolics, day 3 parabolics. We talked about this early in the week. Anyways, so congratulations to the traders who nailed the trades, locked in the money, got off the screen. Some traders are still holding on to some movers on the indexes, oil. And if other traders have had a challenging day, it's part of trading. Welcome to the club. Welcome to being a trader. If you want to make easy money, this is the hardest profession. And there is nobody who has walked in front of you who hasn't paid the price. I can assure you of that. So keep getting better, stay focused, stay disciplined, keep getting better, make some subtle tweaks, 1% better every single day, and may the markets go with you. Have a great day, traders.